ericmother.com, July 9th, 2015, with about 2 hours to go before the market close. Just wanted to do a follow-up video on NVAX, and here it is. It just made a high intraday of $12. Now, I've been talking about just making sure you watch how it reacts to round numbers. Stocks that make a high intraday high with a round number, you gotta be a little bit careful. Sometimes they have a tendency of pulling back, so watch that. Anyway, what I want to discuss here is the timing. Now, since you already own the stock from earlier buy point, and I believe you are up about 23%, just want to show you what I am looking at in terms of what this means with this move right now. Now, there's a little bit of a problem here, in my opinion, and it is a timing issue. Now, you can see from the monthly is perfect. I mean, moved back above 69.10, and since then you can see the power of stocks that reclaim that level above 69.10 on the monthly. Since then, the stock has had a massive 2-month run. Okay, so the monthly looks great. If I was looking to make a fresh entry into the stock, the problem is that right now we haven't seen 2 weeks of rest. We needed this to be another down week so that at least we could have 2 weeks of rest before the next breakout. Unfortunately, we are not getting that. So what this means is that this move this week is not, let me repeat, is not a fresh breakout. It is a continuation of the previous weekly breakout, which means that it could easily run out of steam. You need your stock to be well rested before it takes another attempt at new highs. And as we've been discussing in this series, you want there to be, at least after you make a weekly closing high, you want there to be at least 2 down weeks below the previous weekly closing high. And so after 2 weeks of rest, then you can have a breakout. Right now we are not seeing that fresh breakout, because instead of moving after 2 weeks of rest, it is actually moving after just 1 week of rest. So this is a continuation rally and not a fresh rally, which means the move could easily come to a stall point. If you take a look at the daily, now anybody who was looking to own this from a purely day-to-day holding period standpoint, they had a chance of holding and playing the breakout when the stock moved above the recent daily closing high, and I believe it's somewhere at 11.38. Once it moved above 11.38, which is this daily closing high, now you can see we've had at least more than 2 days of rest. So on the daily, for a day-to-day move, the stock has had more than 2 days of rest, which is the minimum, which is good. So yes, you can get a little bit of an up move here. The problem is that the weekly did not get enough rest. And looks good, reclaiming the level back above 69.1. So from a purely trying to find where you can take partial profits, as long as the daily RSI is holding above 69.1, you have to hold on to the stock and ride that up wave. If it moves back below 69.1, then that's a reason to be cautious. If we go to the next time frame, which is the hourly, there's a little bit of a problem here in my opinion, because you are making higher highs, but the RSI has not moved above 69.10 on the hourly. So when we go to smaller time frame, we see that on an hour-to-hour basis, the stock is a little bit, let's call it weakening in terms of confirmation in strength. What I'm getting at here is it will be a nice time to take a little bit of reduce that position now that we see an intraday high of $12. The RSI on the hourly is not perfect, and I'll show you one other reason why. If you take a look at the 10-minute, 5-minute, 10-day, 5-minute chart, you can see higher highs on a 5-minute chart, while you've been making lower and lower and lower lows on the RSI. So this negative divergence, improving highs, declining strength, generally tends to indicate that more than likely you're setting up for a move lower in the RSI, which is going to influence prices lower. So that's why I think around here somebody can look for reasons to reduce that position. Now, there's another reason why I say that, because if you go to the sector, the biotech space sector itself, it's almost in a range right now here. Been trading in this range for a while, so really nothing that dramatic to report on the weekly, other than the fact that the weekly price failed to break out. It attempted to break out to fresh weekly closing highs but failed, and since then we've been coiling lower. So that's a problem. If we go to the daily, we can see that the daily right now is holding well around the 200-day moving average, which is exactly what you want. So the daily looks good. There's also the possibility that the daily RSI for the biotech space is holding exactly where it needs to hold. As you can see that all this is where this uniformity line has been holding the stock. Every time it bounces to this level with uniform activity, you can see that the biotech space tends to bounce. Double bottom support there, which was this double bottom on the price and a move higher. You got uniform activity below the line and back above it, and again another uniform activity below the line back above it, which was a re-entry there, and it kissed the line there, which is this lows, and now seems to have formed a double bottom. So as long as this is holding, there's a chance that this is exactly what because you do need the sector to be strong if NVAX is going to move higher. Now let's go to the smaller time frame, and this is where I see the same problem. On a smaller time frame, you can see the risk coming off the highs here recently. There was a break, and I'll call that break, we can even draw it. There's a break around here, which happens to be around the 50 level. So this break on hindsight corresponds with this movement somewhere here. The reason why I'm drawing it there is because of relevance. Right now we can visually see that this is where it has been stalling. It has been failing to move back above the 50 level on the hourly chart, and every time it hits that level on the hourly, it shows resistance. There was a recent double top resistance around the 50, which was this high, and over the last hour or so, last couple of hours, it's come there, and the biotech index seems to be stalling. So I start thinking that, okay, if the biotech space is not as strong, and you can also see that on the hourly, the MACDs have not reclaimed the level above 50, or the level above 0, have not moved above 0. The indication is that even as this period here, if it coils back below 0, that's not going to be a good sign. So failure to hold above 0 is a problem, and I just think the fact that NVAX, in fact, let's take a look at a 5-minute chart for the BTK, and you can see that on the 5-minute chart it has been stalling on this level here on the 5-minute window. And I know this is too small of a time frame, but what that tends to indicate is that because the biotech space itself is not showing strength, it is very likely that it is going to negatively influence your position on NVAX. So I personally would think it makes sense, given what the index itself is doing, that your position on NVAX should be trimmed, especially given that we've been seeing this high for the day being around a number of $12. Whenever you see that kind of a round number as a high, your alert should go, and you should be thinking to trim some of your position, especially since the position was relatively big based on your entire portfolio size. So anyway, not to scare you out of your position, you can always scale out in portions. So I've been talking about the idea of reducing this position to about 20% of your entire account size. That way you don't have to worry about it taking a big hit and influencing your portfolio negatively. So just keep in mind that you don't want it to be too much of a bigger portion of your entire position. So anyway, stock's been trading well. You're not losing money. In fact, if anything, you're up about 12%, 23%, 24% on the position. Great, kudos for holding. during this stretch where it was showing resistance, and if I was to go back and spend a second on that, we can see that our analysis did come into play based on this line here because of this breakout. So let me just spend a second here, because maybe there's somebody who might eventually end up watching this video and not know what we're talking about. The stock had broken out on the RSI basis here, and this movement in the RSI above that level corresponded with this price breakout. You can even look at it like that. So there was a breakout here that was successful. Since then, the stock has generally defended that level, and so we decided you could hold around here during this pullback because it was holding above the line. So since then, we've seen it record a nice move for you, which is good. But now we have to be a little bit thinking of reducing that position. Eric Muadad, Muadad.com, as always. Keep me posted. I'll keep you posted. Good luck, peace, and blessings. EACS. And so it is. Woo!